Hi everyone, I'm Shawn Severson, CEO and Head of Market and Thematic Research at Water Tower Research. Welcome to this week's summary of our weekly commentary for the week of August 3rd. Before I get into the 5 things that drove the week, let me start where it counts, with what to actually do with it. 3 reads to carry into the week. First, our read stays with the profitable, higher quality end of the market, and inside small caps, that means the profitable and value names ahead of the speculative growth end. It's still not a blanket call on small caps, it's a quality call, and last week the earnings backed it up again. Second, we're not chasing the bounce. The mega caps popped, but the money didn't follow them up, and the whole week really comes down to Friday's jobs report. So we'd rather see that print before leaning harder either way. And third, what would change our mind isn't just one magic rate level anymore. A real yield-driven push toward 5% would do it, but so would the earnings breath rolling over or credit spreads widening in a disorderly way. Any one of those. Not all 3 together. Okay, here's the why behind all of it. Number 1, the AI payoff showed up, but it didn't settle the argument. Microsoft and Amazon's cloud businesses delivered. Both stocks jumped roughly 8 to 10%, and that's real evidence that at least some of this enormous AI spending is turning into visible revenue. But Meta got dinged on its own spending, and Apple slipped even after a beat. So the market is still being selective. It eased the doubt about the build-out. It did not hand the whole AI trade a clean bill of health. Number 2, underneath the giants, quality won again on the hard numbers. 87% of the S&P 500 companies that reported beat their estimates, and the beat rate stepped right down the cap stack, strongest in the large caps, and easing to about 70% in the small caps. And it wasn't just beating lowered bars. Ford and Starbucks both beat and raised guidance, which tells you it was real demand, not cost cutting. Number 3, the bounce was in the price, not in the money. Even as the big tech basket rallied more than 4%, the money kept walking out of the NASDAQ for a second straight week, and it actually moved into small caps, which barely budged on price. So the rally in the giants didn't draw fresh money. We treat that as a caution, not proof, but it's the opposite of what you'd want confirming a mega cap comeback. Number 4, rates steepened, they didn't break. The 10-year rose to about 4.75%, but the 2-year eased, so the curve steepened as the front end started pricing in rate cuts. That's closer to what the rotation wants than what breaks it. And for the small caps, 4.75 is a watch level, not a wall. What would actually strain them is a combination. Higher real yields, wider credit spreads, and a wall of debt to refinance all at once, not a single number on the 10-year. Number 5. This week, the jobs report is the whole ball game. The Fed is done until September, so Friday's payrolls carry the week. And here's the subtlety. We want the labor market cooling, not cracking. A modest miss that brings rates down helps the small caps we favor, but a really weak number would signal domestic demand is deteriorating, and that hits their revenue faster than lower rates help them. There's a soft print we'd cheer and a weak one we wouldn't, and Friday tells us which we got. It's also the widest small cap earnings week of the year, and Eli Lilly and the consumer names give us a fresh read on the shopper. And before I let you go, a quick lightning round from our quick read, the 1-page summary up front on the corners we didn't get to. On valuation, the earnings estimates kept broadening, running better than 2 to 1 positive for a 4th straight week, though the premium on the biggest names widened back out as they bounced. Crypto gave back last week's independence, softening as stocks rose and seeing ETF money flow back out, which we read as a risk appetite tell, not an inflation one. And oil fell back toward its own futures curve as the whole complex softened, grains and gas down, which quietly takes some near-term inflation pressure off the table. That's the week, the read up top, and the 5 things behind it. I'm Shawn Severson with Water Tower Research. Thanks for listening.